Wall Street stocks plunged to their lowest in 2 years over growing fears of a U.S. economic downturn rattled by a slowdown in hiring and consumer spending. Now, Monday's turmoil raised expectations that the Federal Reserve may push ahead with aggressive rate cuts. Yoo-jin reports.
Wall Street has suffered its worst day in almost 2 years due to fears of economic recession in the U.S. The Dow Jones on Monday fell 2.6%, or almost 1,000 points, and the S&P closed down 3%, both marking the biggest daily drop since September 2022. The tech-heavy Nasdaq lost 3.4%. On the same day, $650 billion of market cap was wiped off the so-called Magnificent Seven stocks, 7 of the biggest performing tech stocks in the U.S. Ahead of these plunges, South Korea's stock market experienced a Black Monday, with shares falling more than 8% on Monday, while Japan's stock market also suffered its biggest ever one-day loss. This comes as recent data show that the U.S. unemployment rate reached a nearly 3-year high in July, stoking fears of a slowdown in the world's largest economy. Amid rising recession fears, there are expectations of aggressive rate cuts from the Federal Reserve. Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, suggested the Fed should hold an emergency meeting to lower rates by 0.75 percentage points, believing the rate should be around 3.5%. On the other hand, some believe that an urgent rate cut by the Fed does not seem necessary.
We went from months and months of when's the Fed going to ease and how much are they going to ease this year and next, to one where growth is plunging and the Fed is behind the curve. So we've had a change in attitude. It's been based on some weakening data. In our opinion, is the economy slowing? Yes. Is there any need for an emergency Fed cut? Doesn't look like it in our opinion.
The market is expected to reassess the risk of a recession based on the new unemployment claims data coming out this Thursday. 송유진, 아리랑뉴스.